Good morning. This week starts in the shadow of Friday's bloodbath. U.S. futures still sinking and China catching up fast. The Russell led U.S. indices down on Friday, losing 2% as this morning finds S&P Dow and Nasdaq futures down up to 0.5% and more. The Dow seems to be headed for a cross above the signal on the MACD, and the RSI is oversold and showing hints of bullishness. On the other hand, we can see an interesting pattern of double bottoms on the chart where each pair is more bearish than the one before, causing a steeper fall in the moving average. My guess would be to ignore the crossover and expect more headwind. We're still suffering the aftermath of the Fed's hints that it may raise interest rates as early as, well, now it's 2020 by the latest rumors, and Reuters this morning informs us that Canada will probably be raising its rates even before. Seeking Alpha this morning reports a further slowdown in U.S. housing permits, but an increase in housing starts. Otherwise, there's little to reflect the trends in economic releases until Tuesday, so until then, we'll just have to suffice with investor sentiment. European benchmarks on Friday all verged towards 1.8% of losses. I don't know why my name is still down there. And now it's gone. Nearly across the board, Danish and Swiss investors managed to keep their indices in the 0.5% region. Meanwhile, ignoring continuing legal strife, the European Central Bank has reinstated 8 banks so that they can underwrite its upcoming €800 billion relief fund debt sale. Their weekend meeting is giving nothing away vis-a-vis policy, even though they were clearly discussing it. We know that because bank head Christine Lagarde told reporters that she was glad they had the discussion. And across the channel, Reuters is expecting the Bank of England on Thursday to hold on to current rates, while board members call for an end to bond purchase. Fitch on Friday upgraded the UK's outlook for economy from negative to stable. Can any of that help us with the FTSE, though, which closed down a chilling 1.9% Friday? Clearly, we're oversold on the RSI, but the MACD doesn't seem to be showing any signs of a reversal yet. Although we closed with a bearish engulf on Friday on the chart, we were in a clear uptrend last week and the week before, so based on that at least, we can still hope for a correction this morning, especially if we manage to break above that diving moving average, which shouldn't be too hard. Except Shenzhen's 0.5% increase, Asia is covered in red this morning, the Nikkei dragging all others down with its lofty 3.4% loss. The yuan overnight finished erasing 2 months of gains, losing another 40 pips, just after the People's Central Bank voted to maintain its prime loan rate at 3.85%. China has just launched the first batch of real estate investment trusts, REITs, on the Shanghai and Shenzhen Stock Exchange that'll enable Chinese retail investors to invest in infrastructure projects. And clearly, with markets being where they are scared, we'd be amiss not to look at the dollar-yen pair this morning. We're talking 2 currencies going up, the base currency on Fed echoes, the counter currency on safe haven bets. And based on this, I'd say the latter just could be getting stronger. An oversold RSI rising, the moving average flattening out. We're just below this week's central pivot after spending all of last week's breaking above R1, then R2. Break below S1, and there's a good chance the yen backers will have it. Oil double bottomed over the weekend after Baker Hughes reported another 8 rigs added to the active number of wells in the U.S. Bitcoin is stable but weak, and the outlook on gold for now is questionable. We have a neutral RSI falling and a very brief break into the upper band. We're in the lower, with the moving average still bearish. All that still on the heels of a dollar strengthening on perceived Fed hawkishness. The Cerberus banking group can chalk up another major acquisition as it buys HSBC's French operations for a $2.32 billion discount, which indicates just how pressured the Anglo-Chinese corporation is to get out of everywhere but Asia. On the other hand, the US is beginning to take notice of Europe. William Ackman's Pershing Square Tontine Holdings. They're what we know as a SPAC, a special purpose acquisition company, and they're buying 10% of Universal Media Group owned by French Vivendi. And so, with more and more of the Indian COVID variant on the horizon, I'm wondering if this week will suffer from markets' desires to get back to normal and reality slapping them on the cheek tomorrow.